Welcome everybody to this Friday's edition of the How to Make Money at Trading Stock Show. I'm Dennis Wilburn with the Active Trend Traders. Mike Traeger will not be with us today. He is in the process of getting some repairs done on his house there in Dallas, Texas. And so we will quickly go through our assessment of where the market is this week. And as most of you know, it's been a very busy week for me. I want to remind everybody that all the materials that we present are for training purposes only, and that our traders should always paper trade any new method prior to the risk of their own personal capital. My stock pick for the day is this little guy right here and this little girl right here. These are my grandchildren. This is Brandon and Sharon. Brandon's our son. Sharon's our daughter-in-law. Little David was born into this world on the 19th, and we're glad he's here. And little sister is checking him out, going, where did that come from? Anyway, she's 20 months old, and so the kids are going to have their hands full. But thanks for all the kind words and everything. And as you understand, it has been a busy week with traveling and getting to see the kids. So I want to remind everybody that this week we were postponed this past Wednesday night for our midweek market sanity check training session. And so we will basically just roll into next week. And next week's topic is going to be refining design trades, how to design trades so that can take effect while you're not watching your computer, so you can set them before you go to work. And not worry about, if they get filled, and, have your protection stops and your targets already set up. So we offer this to our premium members for the active trend trading system. And the week before last, we did successful trading processes, or successful process trading. So this week, the market is, I would say, mushing higher. It's having some challenges, but it is, continuing to push its head up just a little bit. The market, though, about a week ago, according to Investor Business Daily, went back into an uptrend from its short 2 or 3 day correction, and is proceeding to move higher. The S&P did feature a breakout, but it appears to be stalling shortly after that breakout. It pushed up higher, and we'll see the chart here shortly, but since pushing higher, it has basically just stayed within a real tight range just above the breakout line. The Nasdaq 100, it's pushing towards strong resistance at about 45.50. And then the Russell itself is also at resistance. Some of the outside influences that we see coming into the market perhaps this week is, one, we want to remember that both the daily and the weekly charts are not in sync yet. So what does that tell us? If the weekly charts are out of sync with the daily charts, it's telling us that if we are in fact going to go into a stronger uptrend, the two of them have to get into sync, so they're going up together with the indicators and those type of thing. If they're out of sync, the market will tend to kind of just vacillate between levels of resistance and support until the market gets into, back into sync, and then it's going to go either one or two ways. Interest rate increase, it looks like it's going to be pushed till after June. We've talked about it before, that the good news or bad news is considered good news. So economic bad news is interpreted as, oh boy, the Fed's going to delay the rate increases. Therefore, then it pushes the market higher. And that's been working fairly well for quite, some time, probably about the past year or so. But at some point, if Mike was here with us, he'd be fuming right now, saying, I don't understand what's driving this market higher. And he would be, and again, not that he's a perma bear, neither am I, but at some point, the market is going to run out of gas. And it's not to say that it's not going to push a little bit higher before it does, in fact, do that. But we shall see what transpires. So that's about it. And then, part of the things is just the unknowns on the world stage. There are so many just things that could happen, as we said last week. There seems to be that there's this lack of fear, just kind of nonchalant attitude towards what's going on in the market, and that can be disrupted very, very quickly. Here is the percentage of stocks above the 20-day moving average. Here's where we were last week. We were up about 50.59. We had a nice bounce the week previously. And down here at the reversal area, we bounced higher. Today, as we come into our session today, I highlighted this in one of our updates earlier in the week, was that yes, if the market maintains its kind of character and or personality of where fewer stocks in the NYSE and the other indices are actually participating in the pushes up, that we will probably get a reversal back down. And at some point, the few stocks that are pushing the market up are going to finally eventually surrender, and that's going to drive things down, and fewer stocks are going to start falling below. More stocks will fall below their 20-day moving average. We'd like to see a reset on this particular chart, which is down in the below 25, or even down in the 10% level. Because if we get a reset down in that area, typically from there, we will then get a stronger bounce. But Mike has been tracking both this indicator and also the stocks above their 150-day moving average. And for quite some time, about the last year and a half to 2 years, there has been a negative divergence where fewer and fewer stocks are participating or moving. Participating, what I mean is they are moving above those particular moving averages, and so if fewer of them are above the moving averages, the weight of those that are just laggers will eventually impact the rest of the market. So what we could be seeing is another retest down in the lower area here, if in fact we've driven as high as we're going to drive on this particular venture up. We'll be keeping our eye on that. We have a good idea of where the sellers are showing up. We have a good idea where the buyers are showing up right now. And so we're waiting for one of the two sides to blink. So this has changed somewhat, but this is as of, about 9 o'clock this morning. The Dow's up about 2.5% so far to the year, S&P about 3.5%, Nasdaq about 7%, and the Russell was up about 4%. Again, this was taken, about 9 o'clock this morning Pacific time. It has changed somewhat since that time frame. Let's take a real quick look at the charts and see what they're telling us. The chart on the left, of course, is the daily chart. The chart on the right is the weekly chart. As we see, the last Friday, I believe, 1, 2, 3, 4, 5. Yeah, last Friday we actually got a little bit of breakout above this resistance area at about 220, 2220, excuse me. And since then, the index has just kind of moved in this little small range here. Now this kid's set up to be a nice little flag that it's going to break out of and drive higher. And right now, all we know is we have a support resistance at the top, support at the bottom. If it breaks down, it's probably going to go back and retest either the 20 or the 8-day, which is moving up here. And as we see on the daily chart, those of you who follow the whole moving average, the 8-day whole moving average, prices have actually dropped below it and have actually turned it pink. And now when that's happened over the recent last few months, when it turns pink, typically there is a mild sell-off to a lower level. Well, actually has been higher lows and then a rebound bounce. We'll see what this brings today. In observing this particular indicator, what I've noticed is that occasionally you'll get these little where it just turns a little bit pinkish and then busts back up through it. So we'll see if that's what transpires going into next week. The other thing we've got going on here, the stochastics look like they're putting in perhaps a double top, but as you can see, stochastics are going to become oversold, but the price of the stock can continue to drive higher. And what we've got here on the true strength indicator, which is an indicator of it's kind of like the stochastics, but it has a lot better patterns with it. It is up to a resistance area as the market is making new highs, and it'll be questionable whether or not it continues to push higher from there. The momentum on the weekly chart ticked up just a little bit, as it did on the for the daily charts also. Moving over to the Nasdaq. Okay, Nasdaq, as we indicated, it looks like it's going to be pushing higher up to challenge this 45.50 level, which was it basically had an open there back on the 27th of April, and so we know that's a pretty strong level of resistance. And as we continue to push up, it would appear, as I said, is if we take these time frames, it looks like it's almost like in a sine wave type of motion. The time from here to here is about the same as the time from here to here. And so if we're going to maintain that symmetry in these charts, then we're probably approaching a place where the market's going to want to take a rest. It can, in fact, continue to push higher. I think if we still have, here's the all-time high up here at 48.16, set back in 2000. And the index for the Nasdaq could, in fact, we could either push higher, hit this level of resistance, and then pull back and stay within just this trading range. That's been somewhere between 43.50 up to 45.50, and so some good short-term trades can be taken during those time frames on one of the index ETFs. But for right now, we have not gotten a reversal signal on the Nasdaq. And taking a look over here on the Nasdaq as it's pushing higher, again, look at the negative divergence that's setting up here. And then also it's still negatively divergent. If you take a look at this high, which is here, as it moves back up into this level, the momentum is still, not, it's behind the curve. And so, as I was saying, the markets were out of sync, but they're coming more into sync, but they're coming into sync in the upper reversal areas from these indicators. And so we'll see if some hiccup happens next week that might drive us a little bit lower. Russell. Okay, Russell. For right now, the Russell is actually showing it is weaker than the other two indices, which is not to be unexpected. The small caps, oftentimes when the market is a mixed, sometimes the small cap index will lead to the downside. And so what we have going on here today is we got a nice bounce off this level of support at 1248 and the 8-day moving average, but now we're staying below the 8-day whole moving average, and it has also turned pink. If this candle finishes closer down here to the 1250 level, that would be an indication, or even close was below the 8-day moving average, that perhaps we may get just a little bit of a sell-off down, moving down towards the 50-day moving average. One thing that we can do to get an idea of where we might go is just lay in a retracement on that, a Fibonacci retracement. So from the low back at the beginning of May, up to the high. A 50% retracement would put us down about 1236, and a 68% retracement would put us right on top of the 50-day moving average at about 1242, which is a few percentages below where we're sitting right now. We'll see if this continues to be another lower. No, this is, we had 1, 2, 3 spinning tops in a row, 2 dojis, and again another long-legged spinning top doji type candlestick today. I want to show you one thing. Let me get rid of that. I want to show you one thing. I want to switch over real quick to the IWM. Get a snapshot of this, the Russell in your eye, and this is, and I'll show you one of the reasons why Mike typically trades off of the Russell itself, but he trades then he prefers doing this. As you can see on IWM, we do not have the hull turning pink yet. We still look, and while we're getting a similar type candlestick, and it looks like it's getting ready to turn over, it doesn't give us quite the same flavor as actually trading off the Russell. And if you pop up to the TNA, which is a 3 times the IWM, as you can see with this, again, similar type thing as IWM. The hull has not turned to pink yet, and but we've got a similar, looks like a bounce off the, in this case, the 20-day moving average. And if we go back here to the Russell, get that flipped over. And as you can see, on the Russell, we didn't even come close to the 20-day moving average, but on the TNA, it in fact did. But this is, again, and this is where one can set up trades based on the conditions of the Russell, but have it trigger one into a market order on the TNA and or IWM. So any questions on the market, guys? What we're looking at next week, and again, here we are, I'll just cover this real quickly, is we've got the weeklies looking like they want to pop back up on the Russell, but we've got the dailies looking like they may be ready to roll over. If we break through on the daily, the Russell, if it breaks and closes below the 8, then we're probably going to test the 50, and if the 50 fails, then we're probably going to test down in this area down here. Is it considered still topping action or resisting or resting to take off? That's a great question, Gary. The question is what's happening right now, the price action, is it considered resting or is it topping? And that's one of those questions where we'll know after it makes up its mind which way it wants to go, because the two type of patterns are so similar to each other. Let me get up a monthly here. I'll detach that. There we go. And we'll switch this over to a monthly also. There we go. And I'll get rid of that. See what the monthly is telling us. Yeah, the monthly right now is telling us that we're basically just in our trading range. As we can see here, got a nice up day, broke out above this candle, but since then, this is April, so this was March, and so far in May, we have just been right in this trading range. And so it's the higher bounds of it is up here in the 1275 level. The lower bounds are, of course, down here at the 1216 level. The moving averages look like they are in gear to continue moving higher. So we'll continue to watch on what happens with the with this lower moving average on the weekly, on the monthly, and also on the weekly. As I said, if we get a close this week that's somewhere, let's say down around 1248 to 1250-ish, preferably 1248-ish, what we'd have in place this week is then would be a bearish shooting star. And if that was to fulfill next week, we would see more selling. Any more questions on the market? Okay. We'll go back over here real quick. I want to remind everybody that with the active trend traders, that what we try to do is we follow the 5 pillars of trend trading. We identify what to trade, and that's typically IBD growth stocks and or good index ETFs. When to enter, when to exit, what strategies we'll be using, and what to expect. Currently, we primarily were just looking at management trades this past week, and I'll show you one of the trades we got out of. We are still in the ARRS trade, even though it came really close to stopping out this morning. And then our early warning alerts, we were in at 82.68, and it's currently up. It's currently up above $89. Then we got our nice email this week talking about how one of our members was doing with the early warning alerts here, and I appreciate that. And Mike and I are really pleased when people, kind of take the bull by the horns and really start applying the process. So past setups, INCY, we started trading that back on 5.5. We entered 200 shares on that at 5.5. It was bouncing off this level of support at 97.29. We were in at 98.60. As we pushed higher, it appeared that there was a level of resistance up here in the 103 level. And so we placed an order to stop out take some of our profits off the table, and we wound up selling 100 shares at 102.68. And then we held, and we watched as INCY continued to climb and respect the 8-day moving average. And then this past week on the 20th, which would have been Wednesday, we had placed an order, whereas if it got back up into the 110 level, up here where we have resistance, then we would go ahead and sell out half of the remaining shares. And we took the half of the remaining shares out for a 12% gain. And then we're holding the remaining shares to either do a couple of things. If we get a pullback, if we get a nice pullback down either to the 20 or this level of support down at the 105 level, we'll probably reload, and with the anticipation that we're going to break back up through this 110 level and get a close above that, and away you go. But we'll look towards, getting into more shares down there about 105 or wherever it chooses to turn around here after this pullback. And again, we'll probably take a few some profits off at 110, and then let the rep try to build the position so it will continue to rise from there. So I think that is, here's where we're sitting with the trading account through the 22nd. And that just about does it for today, folks. I want to remind everybody that, have a great weekend. And also, this is Memorial Day weekend. And so if you have an opportunity, just remember the folks who basically died to make us free. And so appreciate all my brothers and sisters in arms. So keep growing the egg, trade wisely, trade profitably. And I think we're just about ready to look at some additional stocks. So if you have some stocks you want to look at, just put the ticker in and we'll take a look at those. And while you're doing that, I would just mention that for people who are not members of the active trend traders, you can try us out for a month for $4.99, and it gives you total access to the website, gives you total access to the website and all the text alerts and the whole 9 yards. And so you can go here for this trial. Here's the website. Or if you just want to jump right into at a reduced rate just for members who join, who come on to the How to Make Money Trading Stocks webinar, you can go here for a special rate on a regular membership. And you can join either active trend trading or the early warning alerts. So thanks a lot. I'll leave that there. And now we'll look at some stocks. Okay. Didn't take you guys long. Let's see. Here's a question. Would the remaining shares be sold using the 8-day rule and then turn around and buy again on INCY? Yeah, Tracy, if the 8-day moving average rule is triggered, okay, that means it would be a close below it and then a violation of that, the low of the day it closes below, then I would exit the trade and then keep that on my radar. Keep that on my radar to get into the next leg up, and I would go in with a full position at that point. ARRS, the stock position did not get stopped out, has not gotten stopped out yet, but yes, the option position did get stopped out at 115. $1.15. And Dan, I have not sent out the alert on that one yet, but yes, that has been stopped out. And right now, ARRS is actually making a nice little rebound and potentially putting in a hammer. If we can pull back above the 20-day moving average, that may get it back in gear. This was one of those where great looking pattern, and it just wasn't ready to go yet when we got in over here. And it has tested, it's tested, and this hopefully this test today will be the springboard to launch it up above the 34 level, because from 34 it's probably going to 36 or even up to 37. So let's take a look at, I'll cover a couple of stocks that I'm looking at that look kind of promising for potentially next week, and that's XRS. It's holding that 36 level. It's not a big mover, but if it bounces here, we're probably going to go up to the 39 level. I like that one. FLT also is finding support down at that 151-ish level. And if we can, we had a really nice bullish engulfing yesterday, and we're getting an inside day today. So inside days can be kind of tricky because the stock can go either way from an inside day. But if we can get this, it has closed back up above the whole moving average. And so if it proceeds on from there, that would be a potential. And that the run on that could be, up here from, let me get my, this is not what I want. There we go. Let me go back to my line drawing, the trend line. If we break out above 155, then we're probably going up here to about 163 at least. So it's about an $8 gain. Fleet has some really good option availability also. Okay, we're going to go backwards. ICUP. ICUP did not come in. Why not? Thanks, Tom. Instead of saying ICUP, folks, Tom wanted me to say ICUP. Okay, so good joke, my friend. INDL. Let's see, this is the, okay, India. India has been on a really nice little tear. This is one of the, I want to take a real quick look at this because it is an excellent chart. One, we found support down here at the $18 level, and it appears as if we are bouncing. We've got 1, 2, 3 reversal type patterns, with the last one being on a weekly chart being a hammer. So you would anticipate this bouncing and running all the way back up to at least the 26 or even up to the 27 level, or perhaps if it's pushing it, could get up to the 28. With these foreign ATRs, this is ADRs, excuse me. This is one of the things that you have going that can sometimes be kind of a pain, if you will, is they tend to gap because their market hours are different than ours. But Gary, right now, it needs to get back above the 122 level. I would look at, you got some really good moves here. You got momentum starting to pick up. And on the weekly chart and indicators, it's looking fairly positive, like it may want to run on all the way back up, at least, perhaps to 24 or even to 26. But that would be there's a 12% gain. If it got all the way back up to 27, that would be a 26% gain. So keep an eye on that one. I don't know what it does for the, with regarding to what kind of options it has available on it. Let's see. And Tracy asks, somebody had asked about ARRS. Since it's putting in a hammer day, would I consider adding to the position? At this point, I think I've got 400 shares, Tracy, which is, I think, just about at the limit. I might add a couple of hundred shares. Yeah, I'd have to double check the math to see how close that comes to 20,000, well, about $21,000 for a full position. But this is looking kind of interesting. We'll see what happens. It's still got to push its way back up. And we can now kind of start drawing on a little trend line there. And if we break back up through that and get some good buying volume, that could be exciting. Okay, DGLY. Okay, that's got okay average volume, and I'd have to do, I'm not familiar with the stock, I'd have to do a stock checkup on it through on the Investor Business Daily page. But from a purely technical standpoint, it has come down here and is bouncing off of the 50. And so you've got kind of that if it drops this level here, the $14 level, that's your swing low. And so if you were going to get into the trade, that would be that would be your stop. Yeah, look at what it's done though. It's come up right here to the 20-day moving average. That's where it's found its resistance. And so, but it's kind of a toss-up right now. The volume has not come in real big, but it's looking positive on the dailies. But on the weekly, it looks like it still wants to do a little bit of consolidating. Twitter. Twitter has found support down around the 35 level that coincides with this support here. The question is, but at the same time, this looks like a bear flag. That's downward sloping kind of bear flag, which can, continue to fall. Where's the next level of support? Down here at the 30 level. And so right now it does not, as you can see here from the volume on the daily chart, there's not a lot of people coming in and saying, gee, I really want to buy shares of Twitter. But it's worth keeping an eye on because you've got the indexes are the indices, the oscillators coming down into areas where they typically reverse. But I just want to take a look at this. When Twitter reached a similar point to where it's at right now, it was basically here. and look at it fell some additional down to the 30 level. And so it's worth keeping your eye on, but because these nice moves here on Twitter, you know, they're big moves, but I'm not sure that it's stopped going down yet. So let's see, Twitter. Blue. Bluebird Bio. Okay, volume. Had a lot of buying coming in. Over here, see big volume buying days. Positives on the momentum. Same thing, positive on the momentum on the weekly chart. At the same time, it is extended. And so we would like to see a little, it does a nice job of putting in patterns. So it may be in the process of putting in a pattern right now. This, of course, was a big selling day. So don't be confused. Yeah, it shows that it was a green buy day, but that was a gap up and a sell off. And so you're waiting for a pattern to set up on that. If you're already in the stock, maybe from down in this area here, 132, I'd be using the 8-day moving average rule to exit. Tracy asked a question on Twitter. Why is that a bear flag rather than a bull flag? Well, one is you've just had a big downtrend. And so it is a downward facing bear flag, whereas after you've had a nice little uptrend, then you get a pullback, that would be considered a bull flag. And so here's another question. You got that? Okay, Tracy. Dennis, in micro market discussions over the last few weeks, you might have been reasonably bearish. Me too. At the same time, in trading, you don't have issue with going long. I struggle with that. Any comments? Is it perhaps that IBD selections are not as affected by big indices? Dan, I think part of what it is I think both Mike and I have worked really hard on getting, trying to get to the place where let the price be king. As you can see with the markets right now, the markets are, we think that eventually we're going to get into a serious correction. However, right now the markets are not giving us that serious correction. What the markets are doing for us or to us right now is that they're continuing to push higher, even though everything else, other things are telling us that the momentum, the internals of the market are really, really weak. So but we're just basically trying to trade what the price action is telling us. And if the price action, which is always king, is still saying, hey, we're going up, that's what we're trying to work on. So let's see. Okay. CTRP. Dan, I hope I answered your question. Nice gap up. Now we wait. Yeah, really nice move up. Nice volume on the move up. See, as you can see, right now, unless this price action today on STRP finishes in the lower half or maybe back below 80, this is all good buying volume. If it closed back down here below 80, we would say, okay, the volume, while it shows green, there was a lot of selling in that also. And so that's kind of the part of the clue in looking at what is the volume telling us. Right now, this is very positive. And if you're in this stock, then you can do a couple of things. One, depending on where you got into it, is take some partial profit, because we are way extended from the 20-day moving average. But look over here, this moving average envelope on the weekly chart's 20%. So that was 20% from the 56 level. So depending on where you got in, you are well above the 20% level. So it's not a bad idea to say, you know what, I'm going to take a little bit of profit there, or maybe sell a call to protect, provide some protection. So let's see, Gary said Taser is a competitor of the one we looked at earlier. Okay, Dorothy, Habit. Habit is putting in a hugely bearish engulfing pattern today. It's engulfed not only yesterday's, but the day before, and it's working on trying to engulf the day before that. But where does it look like it's stopping? It's getting right down here in the around the 20-day moving average. Is this a sign that, but you have to look at this also on the grander scale, the weekly charts. We have a shooting star and hanging man kind of pattern, another shooting star this week. And so what we may be looking at for Habit to do is we may be doing one of these to be followed by one of these. As again, this peak over here that we had from this high, which was here, that is what I call a weak high, because it actually closed down here. In other words, yes, buyers did push the price up to the $37 level, but the body shows where we closed. And so it also reflects that I got this high, but I sold off to there. So in other words, here is a stronger level of support, which is just above this 36 level. So 36, yeah, the volume is increasing as we go. So are you still long Habit? Are you looking to get long Habit again? Okay. Okay, yeah, I would never buy a candle that looks like this. We would want it to be where it's okay to have a candle like that, but we're looking for the small bodies for, to show us when things are going to be reversing. Let's see, have I got all, make sure that I got all the stocks, guys. But yeah, Gary said that Taser is a competitor of the TG. Yeah, the one we looked at earlier. Was it the, excuse me, I got to get down here in the DGLY. So let's take a look at, I don't think I've missed any. We've got to look at Paycheck, or not Paycheck, PAYC, which is Paycom. Okay, Paycom is kind of in an interesting position. We had a weekly shooting star candle that is still in place. That is a bearish signal, but the highs of it is up around the 40 level. And we get a flag that's developing right here. After a large drop and sell-off like this flag may in fact be bearish rather than bullish. It is going sideways. You could almost consider a pennant type thing. And after a big sell-off, because oftentimes you'll see a big flagpole, that if this is the flag in the midsection of the pole, then the pole could reach all the way down here to 32 or even lower. And so that's what I'd be looking at there. Of course, we could just hammer out and stay right here and then rebound, but something came into PAYC that kicked it, resulted in that gap down, significant gap. Oh yeah, I think it was somebody said it was they had increased their number of shares. They were going to put more shares on the streets, and so that isn't necessarily a bad thing, but it can whack you around, beat you around the head and shoulders a little bit. So one of the other one, okay, I think this is it. Yeah. This has just been on a tear. Shake Shack got a good, nice rebound there off of 65, and it seems like there's several of these restaurants, the burger joints that are doing the same type of thing. Sonic, not quite as vigorous, and definitely not as vigorous as Shake Shack. But look what you got coming on over here. We've got some really good positive. We just turned. This is a weekly chart. We had a nice little, up move here, and this was a what would be considered a piercing line on a weekly chart, and we just started to move up. And on the weeklies, it's looking more positive, like we want to break up from here. And we have retaken the 50 and are bouncing off of the lower moving averages. My big issue with Sonic right now, though, is the volume's just kind of weak. And so you might be seeing that kind of stuff over into the habit area, Dorothy. Let's see. When can I buy VXX? When it stops going down, Thong. No. Seriously, VXX can be a very good trading trading vehicle. However, right now, as you can see, it has had, it basically kind of came in here and tried to put in a bottom here at 2055, but as you can tell, the VIX itself, VIX is just basically, it is stabilized. I mean, it is at a low, but because this is a really good example for people who are interested in trading the inverse index ETFs, because of how they have to rebalance at the end of each day and do some other things, and how they have to trade the futures and the various things. That VXX is supposed to emulate VIX, but as you can see, it is losing value. And that's one of the big dangers of trying to trade the inverse index ETFs. And if you apply the leveraged inverse index ETFs, they are for short-term holding only. And for me personally, I would prefer trading just the straight puts on the bullish index ETF or the bullish leveraged index ETFs, rather than mess with the inverse index ETFs, because they're prone to do this. As you can see, that is totally different than, this is a weekly chart, daily chart, weekly chart. If this is supposed to be emulating the VIX, the VIX, as you can see, because they've had to rebalance, and at the end of every day, it loses value very rapidly. So I don't know if I answered your question, Thong, or not. Okay, we do have a couple more stocks. Skyworks was looking kind of interesting. It got the breakout here, Dorothy, and it's been ricocheting off of that. So it looks like it's trying to drive sideways for a little bit after having the breakout. And down here at the 103 level, 102.75 level, as it retests that to hopefully push higher from there, that would be where to try to play off of, with an immediate stop immediately below that if the breakout fails. So, okay. Well, any more stocks, guys? Tracy's got QLYS. Of course, I need to be able to type it in there properly. QLYS. Looks like it's really getting set up nicely to take a short trade on. One could almost take this trade right here, Tracy, with to the short side with a stop just above the 40.68 level. With the anticipation, you're going to probably move all the way back down here to the 36.50 level. So, alternate to VXX. That's a good question, Thong. There are times when it can be traded, but right now it needs to right itself, and VIX, the volatility index on the S&P, needs to start moving up. And that's going to tell you when to get in on VXX. It's a good vehicle for short-term trades if the market has established itself in a downtrend with increasing volatility. Right now, we don't have those conditions. Exxon. Okay. Exxon May. What we got going on Exxon here? We basically have got this going on. So we'll just put it about there. So we've got a downtrend, and we'll see if this is going to set up to be a higher low, which could result in a rebound back up through this downtrend line. Right now, we just have to treat it more or less as we're in this downtrend channel, and it's probably going to go back down here to 84, 81. If it reverses midway, and that's what might be what it's doing right now, we're looking for a really good rebound off of here on a weekly chart, and or if it sets up, and as you can see what's going on over here for the last few days, that we have set up this there's a nice little level of support that's there about 86. And so if it appears as if this is turning back up, this 86 level would be a potential area for an entry to, or at least we'll call a high probability entry, because of the probability is probably going up, or a low risk entry because your stop is going to be right below that swing low right there, just below 86. So if you're in here at 86.71, your stop would be like 85.90. You'd keep it really, really tight. So, okay, folks, I'm going to call it a day and get on to looking at. I've been looking for some things to actually short some puts going into the weekend, because it's a 3-day weekend. But with the market acting the way it is right now, it's a little bit apprehensive whether or not we really want to get short on any puts right now, because and that's fine. Sometimes the short puts, holding them over the weekend, work really well. Those are short puts that are weekly puts, but we may not get that today. So, guys, have a great weekend, and like I said, make it a wonderful Memorial Day. Thanks a lot.